business or are you running a business? Valuation is the ultimate KPI.
Hey there, it's Mike Langford. Welcome to the Modern Financial Advisor Podcast, brought to you by Truelytics, the one and only comprehensive advisor transition management platform. This week on the show, I have Calvin Williams, the CEO of Freeman Capital, with me to explore helping clients build wealth. Kind of sounds like a novel idea, right? As you'll hear in this conversation, there is a tremendous untapped opportunity for financial advisory firms who look beyond the mass affluent and high net worth and ultra high net worth segments. By focusing on underserved communities, Freeman Capital is taking what the startup community often calls a blue ocean strategy, meaning they're going after clients that other advisors are ignoring. It's really a fantastic conversation, chock full of great insights for you and your business. I think you're going to love it. Before we get to my chat with Calvin, please make sure you subscribe to the podcast on Apple Podcasts, Spotify, Google, SoundCloud, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a topic or a guest for the show, shoot us an email, podcast@truelytics.com, that is, or swing by the website. Use that little contact form there. It will get to us. Love to hear from you, okay? All right, let's get to the conversation with Calvin Williams. Calvin Williams, so wonderful to see you. Welcome to the Modern Financial Advisor Podcast.
Thank you for having me. It's my pleasure, and I'm excited to be here today.
Nobody's more excited than me. You can't be more excited than me on my own show. I've been looking forward to this show ever since Jeremy Carnell introduced the two of us. It was like, you know, every once in a while somebody introduces you and like, oh, you should have Calvin on the show or whatever. Okay, well, yeah, I always kind of let it go how it goes. And then you get on the call with us. You and I were doing this prep call. I'm like, this dude's awesome. I can't wait to hang out with him. Like, we're like kindred spirits. You know, like, it's going to be fantastic.
Exactly.
Yeah, exactly. Totally bonding with somebody.
Yeah.
So speaking of that prep call, you mentioned something during that prep call that really hit me. You mentioned that you and the team at Freeman Capital focus on building wealth, not just managing wealth. And that kind of hit me like a little bit like a freight train, because I think it's so important. So let's dive in there. Back in 2019, I recorded a solo episode of this show, the Modern Financial Advisor Podcast, in which I urged advisors to look beyond the 1%. In response to a study revealed that 99% of Americans don't use a financial advisor. And the funny thing about that is, when I talk to advisors, very often they're like, hey, I don't know where to find new clients. They're looking for new clients, and yet they're everywhere you look. Most likely these people need you. So I want to dive in here. One of the biggest reasons why people aren't using a financial advisor is they think they need to be wealthy first in order to use one, before they can afford their services and so forth. And you and your team at Freeman Capital are trying to solve kind of that stuff. So let's dive in there. Let's talk about building wealth.
Yeah, so I understand why the industry is set up the way it is, right? Because it made sense that because they were charging asset under management fees, you had to go to the folks that could have fees that they could pay. Yeah. So it makes total sense, right? So it's like it's not a bad thing just off of that note. But to your point, that then leaves a taste in people's mouth, like, well, if I'm not wealthy, then I can't, then I don't qualify to talk to someone. And so, what we really focus on here at Freeman Capital is how can we engineer our business model to focus on wealth building, because that is what the 99% need. They need a journey, a plan, and a methodology on increasing their net worth, not just on trying to maintain it and grow it. Because most of our folks, they're coming to us with negative net worth. And, because that's where, unfortunately, most of our society is right now. And so for us, we see wealth management and wealth building as two separate subsets that you have to build a different set of solutions to help people build wealth than just to help those who already have it and you're managing it.
That's really, really smart. It's interesting. I've often said this about just people in general, is that we're really uncomfortable talking about money. And I think that's an American society thing. I'm not sure what it is like around the rest of the world. I'm ignorant to what it's like around in other countries. But in America, we're kind of taught that if you have a lot of money, you shouldn't talk about it, right? You should be kind of hey, that's rude. It's gauche.
Yep.
Don't talk about your money. And by the
Right.
way, if you have a lot of money, somebody else doesn't, and you might feel a sense of guilt that you have more than them, and they might want you to feel that way. But on the
Right.
flip side of that, oftentimes folks feel a little bit of shame, right? Like they should have more money.
Right.
That their financial life isn't going the way that it's somehow a reflection of like them as a human being, like that their worth as a human versus the reality. I was like, hey, it's just it's a money issue, right? And money
Right.
issues can be solved, right?
Yep.
How do you go about addressing that and attracting customers, clients to help solve that issue for them, right? So because as you said, like the industry is set up to serve people who already have money, right? And so they've gotten really good over the years of saying, hey, you got a lot of money? Come work with XYZ Financial. We're the
Right.
best shop for you.
Right.
How do you go about reaching out to folks that don't have it, or may have, like you said, that negative net worth, and letting them know, hey, we can help you and it's worth you working with us?
So this to me is the most energizing part of being an outsider. When you, and I mean, we're, even geographically, we're headquartered in North Carolina. This is not Wall Street.
Yeah.
And so our whole mentality has to take into what are the standards, and then being a outsider, helping people on the outside how to help them get to feel comfortable to get started.
Yeah.
So one of the things that we did was we conducted one of the largest private millennial minority wealth studies that we can find, and we surveyed close to 4,000 people.
Oh, wow.
And even the term wealth made people feel guilty because they felt they didn't have wealth. And so even the jargon that the standard industry is taught to use turns off people who look up at those and say, I'm not there yet. And so it really comes from a standpoint of not just how do we take these same products and package them in a way that is more cost effective or anything like that, but it's like, how do you make the journey that the customer has to go through make them feel welcome, when historically and due to the barriers of the minimums in terms of AUM, or it could be from gender or from racial, like they did not feel comfortable even going to this space. You have to start from that place of them being uncomfortable and understand that in a very deep way to get them to go down the journey of building wealth.
That is fascinating. I never even thought of that, to be honest with you. We throw around the term wealth management,
Yep.
or financial management, all that type of stuff a lot. But just the terms, the words you use, the word choice could make somebody uncomfortable, ashamed, whatever.
Yeah.
And almost shut down, right? It's you and I actually went on our prep call. We talked a little bit about fitness, about personal fitness and staying in shape and so forth.
Yep.
And if people who aren't watching the video, by the way, you're missing out. Two dudes who are just handsome as heck, just ripped. No, I'm just joking. We're not really ripped.
I wish. That's my goal. Like, that's my New Year's resolution, and I'm not doing so well on it, but I got 300 more days to go. So
exactly, reasonably good expectations of being in shape.
Yeah, exactly.
But I think that's true for a lot of folks. It's less about, hey, a lot of folks aren't sitting there like, hey, I'm going to be wealthy someday in the classic sense of wealthy, meaning that I have millions of dollars and I'm that top fraction of 1% type of mentality. They're like, listen, I want to have a vibrant life, and finances are a core component about that. And some of the things you were hitting on, I think, speak to that concept of accessibility, right?
Right.
Accessibility to financial advice, because if you, in many people's minds, they don't have the money to afford a financial advisor, or they came up in a financial home situation where money wasn't talked about and money wasn't managed well, so they don't even know. And as you mentioned, some of the business models aren't designed to serve those folks, so that's kind of stinks as well. But it's funny, we live in this time that's both magical and terrifying for people who in their personal financial lives. Like, on the one hand, there are companies like Freeman Capital and a host of other online resources available to people who are looking to improve their financial lives. I mean, we all carry around these these things in our pocket, these smartphone things, which allow you to access all the information ever accumulated by humankind, right?
Right.
You can learn from people like yourself. You can Google your own stuff, read books, what have you, listen to podcasts. So in that respect, magical. On the other hand, there's information overload, right? Most folks are completely unequipped to process financial information, and marketers have never been better at separating you from the money in your wallet. You know what I mean? Like it's true. It's like they're really good. Temptations out there.
Right.
So how are you and the team at Freeman Capital making financial advice more accessible? And what is it about your model that sets you apart from like the DIY solutions out there? Because there's lots of those like, hey, look at this thing and just do it yourself. Right.
Yeah.
What are you guys doing?
So, I mean, this even starts with my own journey. I mean, because I was an entrepreneur early on in life. I mean, in college, I was running a tech startup that became the preferred vendor of web development of my whole college, and we grew it and scaled it. And then I sold that to my partner and took what I thought was some money. So I am a pretty financially savvy guy. I mean, you know, my parents, they gifted me with a credit score over 750 when I was 18 years old. I bought my first house at 20 years old by myself. So like I was already on a path, but even still, when I took what I thought was some money and tried to find a solution online, the DIYs, this is the challenge with the DIYs from my perspective. We are asking people who are dealing with the joys and struggles of life, be it work, family, downtime, to then learn a whole new skill, a whole new discipline. And we don't say this for medical professions. It's not, hey, you broke your shoulder, go study how to be a doctor or a physical therapist and then get that back together, right? And so the burden of having to learn so much to then decipher what of this information overload is applicable is the challenge with DIYs. And because even myself, when I sold that a company, I called up a wealth manager. I was like, hey, I'm feeling wealthy. You know, I'm feeling kind of good. You know, like, well, feelings aren't facts. We're like, there's a minimum and you don't meet my minimum, so we can't help you at all. And I had to take my little pride on back to the house. But that is really, that middle point is where Freeman Capital is different, is that we focus on giving people the 3 steps at a time they need to complete that would result in their net worth increasing. And we focus on financial planning. And so we look at the full gambit of financial planning, from cash flow to budgeting, through investing and through your job, retirement, all the way through estate planning and wills. Because we know that people are going to go through that journey. But if you just give them the information, we have found that people do one of 3 things with it. You know, the minority will go and do it on their own if you just give them information. But the majority will either not read it or read it and not apply it. And so the way that we do and make it accessible with making it educational is that we have our cost start around the price of a phone bill per month. So it's financial planning as a monthly subscription service that's less than the price of a cell phone bill. And then we give education at the point of action. Depending on what step someone is completing, we then can educate them on why and how that step will increase their net worth and make them a more savvy investor, and then help them to be accountable or do that a step for them. Because again, when you're dealing with a person that, if you talk about wealthy, they think about Elon Musk and say, well, I'll never be like that.
Yeah.
And so, you know, because that is what wealth means, and because that's what we talk about on time, the 100 most wealthiest people. Like, we don't paint a picture of someone wealthy who worked for 30 years, retired, and is living out their life. Like, that's not being wealthy, when in essence it is a form of wealth.
Sure.
So we have to start where they are with their psychological perspective of what is wealth, and then with their financial literacy, and then what is their anxiety around finances. And by understanding those 3 things, we can help folk begin to build wealth.
I love it. I love it. I'm fascinated by the subscription model for financial services. I know many folks in our industry might bristle at it, to be honest with you. I think the more traditional financial advisor, I think, but we are seeing some changes there. I've actually met a lot of financial advisors and firms that are starting to tinker around, like maybe subscription model is the right model for us.
Right.
But the ones that are bristling at it, it's like they might be nervous about the implications to their existing model that's working really well for them, right? I charge 1% AUM. I got this client years ago. I've grown that relationship and the assets that come along with it. 1%'s working for me, right? That type of thing. So, historically, I think one of the interesting things is, as it relates to the subscription model beyond that, is most financial advisors built their business via like what I would consider hand-to-hand combat, right? They're out there meeting people. In the early days of stockbrokers, they're dialing for dollars. Like they landed at a desk and like, Calvin, welcome to XYZ Financial. Here's a list of phone numbers for you to call. By the way, while you're at it, call your aunt, your uncle, your mom, your dad, your brother, your sister, everybody you went to high school with, invite them in, right? And then you go to these Chamber of Commerce meetings, these luncheon seminars. But once those advisors got to 100, 150 clients, or hit 50 million AUM, that's good, right? They just it's like that escape velocity for most of them, or they get fat, dumb, and happy, and they just kind of like, this is awesome. I work 30 hours a week. But the subscription model requires a completely different approach. It offers also dramatic benefits, as you laid out. How did you come to the subscription model, and what are some of the things that you and the Freeman Capital team have learned so far about using that to serve your clients?
Yeah, so I will say that the subscription model offers a lot of advantages to the clients and puts a lot of pressure on the firms who make the switch. But for the customer that we are servicing, which, to be very clear, like, it's not the accredited investor who we're targeting. Like, we're targeting folks who make between 50,000 and up to about 200,000 in annual household income. So middle America. And this customer is used to paying everything on subscription: phone, cell phone bill, internet, like everything is on a subscription. And so in an effort to make it more accessible and lessen the hurdles to take the first step, it makes sense to us to build a financial planning model that would match the rest of their life. If they're used to paying subscriptions for everything else, it is easy for them to get like, oh, okay, financial planning through a subscription. And then every month, the work is on us to earn them. Because at Freeman, there's no contract. So they can cancel at any time. Now, mind you, we have a 98% paid user retention rate month over month. But the burden is on our company to add value to our users each month to ensure that they stay subscribed. And so that is why we focus on those actionable steps and drive home, let's build your net worth, because our interests are now directly aligned with that of the customer. And that's why they like the subscription model. And that's why they stay with us as we go on.
I think it's absolutely fascinating. And I love the fact that it's so sticky, 98%. By the way, that is actually one of the benefits of subscription models. As a general rule, I mean, we always joke about the gym, right? Like somebody joins the gym and if they don't go, they keep paying because they want to go. And I think there's some element of that here as well, right? Like even if for some reason a couple of months goes by and a Freeman client is not using the service, like actively using the service, they're still inclined to stay because like they want the result of using this of the service there. And then I would imagine, and stop me if I'm probing too deep here because I'm really curious about this. So I would imagine that, there's eventually other models that could be in products and services that can be layered on top of what you currently offer. Like, so I would imagine if somebody accumulates and grows enough wealth at some point in time, you can say, hey, we can offer some more wealth management like solutions or whatever to the model, right? So it's not just, hey, we're charging the equivalent of a phone bill a month, whatever that, that is. It's like, hey, we can offer other things. This is getting in, a core customer base, proving a model, proving that this market is worth serving, right? And we can serve them well, and then growing from there.
Yeah, I mean, that is spot on there. I mean, there's AUM fees that can be charged on top. There are other products that if folks want to provide those to an audience they work at as well. For us, we look at insurance as a product to actually fill a need for our clients. But the big thing is it's to experience the value of having a financial planner. You really can only do it by experiencing it. Like when you can sign up, it's like, you know what, I'll risk a phone bill's cost to work one-on-one with a planner. Like, oh, like well, this actually is good for me. And so, for us to get them over that initial hurdle, that's why we take this step. Because once they get to experience it and then they see, oh, well, if I just do these 3 things this month, my net worth is going to go up. I feel more wealthy. I am less anxious around my finances. And then that connection is made to Freeman Capital and to our planners. And then that connection is there. And then we keep building with them month over month. And so it really is a way for us to prove the value and to put the customer who is doing something that they've never done before. Because as you said, 99% don't even have a planner, never even talked to one. So it just lets them decrease their risk so that they can get used to it and see like, oh, I do deserve this. I should have this. And this is going to help me and my family be in a better position.
That's fantastic. One of the things that you actually hit on this a little earlier, and I think that's worth talking about because it is, it's a driving force of Freeman Capital, or a driving force of Freeman Capital, is that you're focusing on helping folks in underserved demographics build wealth.
Yes.
And not too long ago, I had a woman by the name of Laura Gregg on from FlexShares ETFs, and they had done this exhaustive study on diversity, equity, and inclusion in this space, and it was really impactful to me, and it was really fascinating. So the first thing that will jump out to anybody who goes to the freemancapital.co website is that the complexion of the folks featured on the site is decidedly darker than the one tends to see when they go to other financial advisory websites. Now, full disclosure here, that does not mean that other financial advisory websites are intolerant or racist or anything crazy like that. Okay, so this is not that type of conversation. What it means is like, you are targeting a very specific market, and not to the exclusion of other markets, but
of course
you've made a decision that this is where we want to go. This is the market we're going after. So I guess let's dive in on that. Why have you chosen to focusing on serving this niche, and what opportunities do you see there? Get what I'm saying?
Yeah, I get exactly where you're going.
Yeah.
So, all right. So I want to frame up a opportunity for you. Okay.
Sure.
Mike, here is a opportunity. There is a demographic that is the fastest growing population in the country. They are experiencing the fastest income growth in the country because for whatever reasons, they weren't getting college degrees and stuff 100 years back. They are now becoming one of the most educated groups in the country. And as such, their income is growing, and in the next 30 years will become the majority within the U.S. population. That's the specifics of this demographic, okay? And based on that criteria, it's a good business move for us to focus on this demographic. Now, it happens that this demographic and me share a same ethnic background.
Sure.
But the driving force is, how can we help the most people who need it the most? And good, bad, or indifferent, that's people who are people of color, because historically, the wealth management industry focused on those who had wealth, and they're generally a lot more light than brown people. Okay, that's just.
I got to tell you something. I love this conversation, and I want to stay on this for a little while, because that's exactly what we talked about. Yeah, we talked about that with Laura Gregg. We position that as, this is an opportunity deal, right?
Yes.
This is not a, hey, industry, you need to do better. You're terrible people for not being more inclusive type of stuff. Or if you are a financial advisor or an RIA firm, and most of your advisors are white guys in there that are 60 years old. And most of your clients look a lot like your advisors. This isn't to shame you. I think this is an awesome opportunity to talk about opportunities, exactly how you laid it out. Look, we have demographics that are growing faster, not only in
Yep.
number, but their wealth accumulation is growing faster as well.
Yep.
We talked about, Laura and I also talked about on a different podcast, a study that came out that 60% of college students today are women. 60%.
So, yeah.
So it's like,
Yes.
so what do you think is going to happen with wealth distribution from a gender perspective in years to come? If the highly educated folks in America tend to be female, you're
Yes.
probably going to have more wealthy women, and some of them
Yes.
might be in either heads of household or solo head of household. They just might be not married or whatever. And so if you
Correct.
don't have a
Correct.
plan as a
Right.
wealth management firm to service women actively, you might be falling behind at some point in time. So I love this.
And here's the really powerful thing is that the marketing does not have to be mutually exclusive.
Sure.
Like we at Freeman Capital have clients from a wide background of gender and race. Like we have clients that are from everywhere. Yes, we made the choice to go after the demographic that's been ignored the most because it presents us the most opportunity to do good and do good business. And so that really was our motivating factor is that when you look at closing the wealth gap within our society, you then peel that back and as you look at the various layers, you see that if you're going to close it, then there are communities that have been the farthest behind that now happen to be the fastest growing in income, but they aren't translating income into wealth. And so just by viewing things as a pure capitalist, you will see that there is opportunity in doing good. And
Yeah.
that is what we're focused on doing.
What are your? I flip and love it. By the way, it's just like it's like it's just so inspiring to me. It's like when you decide, because I it's different because of my ethnic background. Is I look like most financial advisors in the world, except for the beard. But as a general rule, they tend to look like me, right? It just is what it is, right? But I grew up in a very low middle class, blue collar, suburb of Boston, small city just south of Boston, is like double, triple deckers and so forth type style homes. Yep. So it wasn't like people were rolling around wealthy in my neighborhood. So we weren't getting marketed to by wealth management firms and so forth. What do you do if you want to? How are you guys approaching targeting, like getting in front of that audience, right?
Yeah.
Because I think this is a gross mischaracterization, but I talked about this a little earlier. You get the dialing for dollar stuff for a lot of advisors do, but then they do things like seminars, they do the golf outings, golf tournaments and so forth. You see all the major wealth management firms advertising there. We went to Formula One this year here in Austin. There's dude, come on.
I'm a massive Formula One fan. We didn't talk about that in our pre-call.
Well, we'll talk about that in a minute. We'll bring it in because we can make it relevant. Man. I could find a way to work Formula One into every conversation.
That's why we're kindred souls, okay? Because I can do it, okay?
So that's right, because Jeremy said it in the email. He's like, Mike, because Jeremy came and sat in, I had some Tower Club seats, and I invited him to join me for the Tower Clubs. It was really cool. So there was, but you see a lot of financial firms kind of putting their branding on stuff and these higher end things because they are trying to attract a higher end client.
Higher end client, exactly.
So if you were a firm like Freeman Capital, what's the approach to going, hey, look, I want to serve a client that is growing wealth versus already has wealth? What are some differences in that marketing and client acquisition process?
Yeah, and I will actually speak of it in terms of what Freeman does, and there is a financial advisory in North Carolina who, and just to be very transparent, like it's ran by a white man and a white woman, and they have realized the economic incentive of diversifying. Mm-hmm. And I will talk about how I'm helping them out, just giving them some advice as well. And so for us, we very squarely wanted to deeply understand who this person was that we are targeting. Yeah. And so we spent significant time and investment of time and capital on understanding where are they online, who are they engaging with, who kind of influence them both in real life and then online as well, what communities both on and offline help to influence them. And then so it's actually the same practice that the high net worth wealth management firms are doing, because they know that, as you know, like it's expensive to even be a fan of F1.
Yeah.
So, that's where your clients may be. It's that same type of connection with folks who are building. Like there are so many associations, trade groups, communities. There are, big about like fraternities and sororities that have been founded to really help people just come together as they build up. And so for us, we build relationships with those organizations who can send us thousands of, leads per month as we grow and scale. The company that I'm helping in North Carolina, they are a bit more traditional, where they generally focus on higher net worth clients, but they wanted to carve out a percentage of their business for the wealth building type of clientele. And what they are doing is just like what you said, they are finding folks in the community that they can partner with to help vouch for them, to bring them into the community so that they can be trusted, and then providing education. And then they're even changing their business model for these lower end type of customers in terms of assets to help them get into their pipeline to then grow and become an oncoming client. Now, for this shop, they will never become the majority of their clients, but they see value in trying to help out, and that's how they're doing it.
That echoes some of what I've heard from a couple of other people who, as exactly what you're just describing, they run traditional wealth management shops, right? So their target client is high net worth or ultra high net worth. However, in a couple of instances, one of them, Gil Baumgarten, who I most recently had on the show, and he's, runs a 9-person RIA firm, and he's got over 1.5 billion AUM. Like he's crushing it, right? Well, he offers their wealth management expertise and service to like church groups and nonprofits for free, right? And he's like, here's one of the benefits for me. Number one, chances are I'm going to get the executives at those firms wealth to manage, but also every once in a while, somebody pops up, right? Like somebody comes out of that organization and grows their wealth and then wants to work with me, because that's I introduced them. And it was the same thing. It was I'll have to go back and I'll link up this stuff in the show notes. We had one where one gentleman was talking about Kroll. What was his first name? Oh God, and his last name is Kroll. He was talking about how they have a education program. They go out into the communities and whether it's boys and girls clubs or whatever, and they educate on financial management. They're just doing that. He's like, mentoring's awesome. He's like, but we also offer it to our clients. Many of our clients, even if they've become wealthy themselves, they find their kids are just woefully unprepared for managing money. Like, so just because you're a son of a rich kid doesn't mean you're going to grow up to be a rich kid. You have an edge. You're definitely a little further along. You got to, you're starting out on third base, but you'd be surprised at how many of them are just like, undereducated when it comes to finances. So it's kind of a similar issue, right? Like go fish where the fish are, get to the community, if you will. Are you doing anything special digitally? Like, is there a way that you have found works
best? That's massive for us. I'm not going to go too far to that.
No, I want you to get the secret sauce. I'm not looking for the secret sauce.
Yeah, I mean, for us in terms of digital, that is massive for us. I mean, we want to understand where folk are, what platforms they are on, the best messages that would resonate with them, and then bring them through the rest of our journey. Because for us, being that we are SEC registered and we can serve all 50 states, we want to capture as much of this market as we can, because we see that we're a bit of in that first mover category with providing this model with the target that we're focusing on. And so for us, digital is a massive play for us.
That's awesome. That's fantastic. And I asked that question, and again, I'm glad, I hope you wouldn't think I was trying to pull the secret sauce out of how you're reaching your clients and client acquisition process too.
No.
But I think this is important for today's audience, right? We talk about it a lot on this show, that the average financial advisor is around 60 years old. We're seeing some transition where, the younger advisors are coming up and some of the older advisors are getting ready to, move on out.
Right.
And the reality is we as a population of human beings, regardless of ethnicity or social status or economic status, spend a lot of time online. We just do. Our faces are in our screens quite frequently, or on the earbuds. Right now we're in your earpods or your speakers right now in your car.
Yep.
So as a result, it's like that's where you're going to have the opportunity
Yeah.
to connect with your prospects and your clients. And it's a really important thing. And I'm glad you echoed that. And it doesn't matter what your client base is, whether it's, those who are looking to build wealth or those who have wealth, that's where you're going to reach them. I know we're getting ready to turn for home here. We're coming around, turn 17, at the Austin Grand Prix in Dakota. Let's talk a little bit about acceleration. So Jeremy introduced us because you two met at an accelerator, the RevTech
Correct.
Labs FinTech Accelerator Program. And since I think this will be released after your big news, you and the team at Freeman Capital have been accepted into Techstars, which for any listener or viewer who is unaware, Techstars is one of the most prestigious startup accelerator programs that exists. It is truly, it's extraordinarily hard to get into. They really do pick the best of the best, the most promising companies, the entrepreneurs that they really believe in. So it is truly, like, again, anyone who's listening or watching, like Calvin and the team are crushing it in order to be accepted. So congratulations on that.
Thank you. Thank you very much. Thank you very much.
So let's talk a little bit about acceleration, right? F1 cars accelerate. We can still keep working beat the shit out of that, that analogy. By the way, I actually did, for anyone who's like, not sick of my race car talk just yet, I actually did a podcast a couple of years ago on, like, your financial firm should be like a racing team, right? In order to be successful.
That would be good.
I created a lot of analogies in there, but it's not just the driver behind the wheel that makes a firm
it's
go.
the whole
right?
pit crew and everything.
Everybody's gonna be operating. Everybody's gonna be operating.
Exactly.
You've all got an important job to do.
Yeah.
I love the notion of modern financial advisory firms using a startup approach like you are. Like you mentioned, you're SEC registered, so you are a registered investment advisory firm at Freeman Capital. Yet you're a startup. You're getting into like the most prestigious accelerator in the country, and you're going at it with a different mindset, and in some cases, slightly different model. So for the audience who might not be familiar with this, would you share some of the experience of what you had so far and what you're looking forward to out of Techstars?
So I'll just say that operating a venture-backed company, which is what we are, and by venture backed, it means that there's like a venture fund who gives you money to go and run. It is much harder than just running a lifestyle normal business. Like when I was running my first shop, it was a lot easier because there were less demands on me for, like, this is the biggest thing that people have to think about when they want to go into being in a acceleration form of the venture backed, is that you are taking capital to then return 10 times that in a matter of 3 to 7 years, probably more like 5. And so it just causes you to look at everything differently. It's like, back to that question around digital, and then how do we grow and scale? Like we can't do community events in 50 cities and reach the growth goals that we have as a platform and as a company. So when a founder wants to be venture backed, it basically means that you have to envision your whole business model as if you were already at $1 billion valuation, or a company that's worth that much based off of assets and not assets under management. Like it could be users, it could be whatever that ownership is, and then how to get there within a matter of years, and you are always going to be wrong.
I love the fact that that's so funny. It's always going to be.
That's how it is. So, you go through these accelerators to help you find out all of the ways in which you are wrong. And so you want to be right on a few key things. You got to be right on who you're servicing and what product do they want. And the rest of this, you probably won't even know. And so like that is the dichotomy of being in business as a venture-backed business, because you're really operating with players who only see success as a home run.
That's right.
Yeah. If this business could pay everyone their full salary, we help thousands of people, but we don't make $1 billion valuation, to them, it's failed.
Yeah.
So that's the joy of like like it sounds cool. You get these press releases. You know, you're gonna be the next Elon Musk or whatever. But the other thing is that is the world that you live in, where it's literally like you need to be a home run to win when you're in this space.
Yeah.
So programs like Techstars and like RevTech Labs help you develop and level up to get there. And then coming out of those programs, you're in a better position to accelerate to the next level. And that is really what they're doing and why we're so excited to be in Techstars and go forward from there.
Yeah, and it is wonderful. Again, for those who are unfamiliar with what's going on in these accelerator programs, your team's going to get mentors, access to mentors who are relevant to the business and relevant to the challenges of where you are in the stage of your business, right? So it won't always be like, it's just we got some financial services exec who's going to come in and tell Calvin and the team, what they've done to succeed in the past. It might be somebody from the consumer packaged goods business who comes in and is like, hey, listen, here's some of the issues you're dealing with. We can help you figure out that type of thing, whether it's client acquisition or whatever it is. It's really fascinating. I love it. And I actually think this, you might see, we've already seen some on the robo-advisory front and so forth, but I think we're going to see more and more firms. And as you said, look, it's not for everybody because once you take outside investors' money that are coming from venture capital or angel investor, there's an expectation of a future liquidity event. So imagine if you started your RIA firm and you got a couple of buddies together and they put some money in, they're like, hey, listen, we are going to expect you to sell this company at some point in time. And you're like, what? Sell this company? And that sale might be through acquisition, through private sale or going public or whatever, but there will be an expectation that there's liquidity sometime. That doesn't have to be.
And they're on your board and you report to them.
That's right. So you report to them. Like you have a boss.
It's not a friendly, hey, at some point we need to say, it's like, hey, what's going on, buddy?
Let's go. You are replacing up.
Okay.
No, but it's wonderful. I love what you guys are doing there. The website is freemancapital.co. You're active on LinkedIn, Twitter, and everywhere else, I expect.
Yeah, of course.
Awesome. We'll sure we get all those profiles linked up in the show notes for people. Thank you very much, Calvin. I really appreciate you having on the show. You and I will talk F1 after we click the stop record button.
That sounds great. Thank you for letting me join your platform and the work that you're doing. I greatly appreciate it.
Thanks, buddy. Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge props to my man, Calvin Williams, fellow F1 fan, fellow middle-aged dude trying to stay in shape. Guy, we had a fantastic conversation. Some of those conversations were obviously, as I mentioned before we clicked the record button there, but it was great bonding with Calvin. I really, really like him. I love what they're doing at Freeman Capital, and I wish them the most success. It's really a smart idea and a smart approach to tackling the building wealth challenge. As I mentioned at the top of the show, if you haven't done so already, please do make sure you subscribe to the podcast on your favorite podcast platform and hit us up with questions and suggestions. You can just reach out to us, podcast@truelytics.com, or swing by the website, use the contact form, or hit us up on the socials. We're active everywhere, LinkedIn, Twitter, Facebook, the YouTubes. You can reach us. Truelytics is there. I'm there at Mike Langford, and really easy to find. I look just like this, only all my profile pictures don't have the beard. So, imagine this, just balder. Anyway, all right. Hope you're having a wonderful day. Please be safe and be nice to each other. We'll see you next time on the Modern Financial Advisor podcast. See ya.